All right, I finally got my camera working. Sorry to delay things by 8 minutes. I apologize. I've been sitting here pissing around for about 7 minutes trying to get my software to connect to YouTube, even though it was working just perfectly on my Discord during my VIP live chat. That runs into my YouTube show on Tuesdays and Thursdays. So I apologize for that delay. All right, so we're gonna cover Bitcoin first, Ethereum, XRP, Doge, and I will then move on at about 6:40 to answering questions. And again, if anybody new is on here, I typically get enough questions from the YouTube Cryptillion or either tier members who have emblems next to their name, and I typically only have time to answer their questions. So if I skip over your question, I do it on purpose, but for a reason. I that's part of the deal with being a tier member. And on my non-live videos, if you wanted to check out what that's about, there's a join button by the subscribe button, and a video pops up, and it explains what that offers. But that's one of the benefits there, plus daily updates and all that. So let's go ahead and jump into what Bitcoin's doing. So it looks like Doge is stealing the show, but we're going to start off with Bitcoin. Bitcoin is very boring right now compared to Doge and a few other coins. And my video, non-live video from Monday, October 31st, is I explained the idea that on Tuesday, so essentially from, where did Tuesday start? Yeah, about here. So I made that video about here. I said, hey, Tuesday, not much is going to happen because all of Tuesday is that set, and like in volleyball I used that analogy. It's going to be set for the bi-directional volatility whiplash of price on Bitcoin and most major assets on Nasdaq SPX around the FOMC meeting, 2 p.m. New York time on Wednesday, the 2nd of November, which is around 6 p.m. or 6 or 7 p.m. London, Berlin. And Bitcoin, again, will move. It typically moves so you have to guess a middle point. So this is FOMC specific and CPI data release, core CPI, but it's at the same time of each other. So you have to guess a middle point, which typically is not too hard to guess. And then from that middle point, FOMC, Bitcoin price historically goes 5% within 5% up and 5% down. It doesn't necessarily tag both perfectly, but that is, like, I guess, if you can put restraints on what market makers are going to do and their algorithms going from traditional finance, Nasdaq, SPX to Bitcoin, typically their rules, if we're guessing what their rules and parameters are, it's usually 5% up, 5% down from that middle point. Therefore, the day before FOMC, they're not going to deviate from the middle point very much because it's already there. I've already guessed what the middle point is. And the last two FOMCs, I guessed the middle point like exactly. And so I'm fairly confident with my guess about the middle point. Therefore, price was already at it during my video yesterday here. Therefore, price shouldn't have done much today. So since my video, it has had it's only gone up 1.3%. And it's with total range of the entire day is less than 2%. So that is essentially what's happening. It's riding on the middle lines. It's fairly similar to my lines on my micro chart that I offer for when I run live charts. But the actual middle points are these right here. It's essentially a band, and that is going to be your middle point. So 5% up and 5% down from that middle point are what you can see right here. That target and that target, 5% up, 5% down from this middle point. And price specifically on Wednesday should not deviate past either. On Thursday, Friday, easily could, because you could get continuation. But in general rules, tomorrow, all right, not all of this has to happen exactly at 2. So, but you typically get the same type of shape every single time. Whether it's CPI data release or FOMC on Bitcoin, the way the bots work is they make one shape, or the inverse of the shape. It either before FOMC, before 2 p.m., it floats up, then during FOMC spikes down, then goes back to the middle, all right? Or it'll float down, spike up at 2 p.m., and then meet in the middle, and then close the day somewhere in the middle. So tomorrow's closure, daily, not Bitcoin daily closure, But when traditional markets close at about 4:30, which is about 3.5 hours before Bitcoin's daily candle, the day Bitcoin should find itself roughly here or between this area, really, around 4 p.m. That would be my guess for tomorrow. So no matter how high it whiplashes up or whiplashes down, I think by about 4 to 5 p.m. Eastern New York time, that price of Bitcoin will find itself here or has a decent probability. So just remember, so it's the reason why I think this is important, why I'm stressing it at the beginning of this video is it's easy to get excited with price going way up, easy to get excited with price going way down, whether, depending on the way you're trading, but realize it's likely going to end the day somewhere between these numbers, okay? And so let's dive into the micro time frames within the Bitcoin chart. Let's get it. Oh, I forgot my intro. I was going right before I did this live show. I was heading out, and my wife's like, "You're gonna do a live show like that?" And I was like, "Why?" She goes, "You look like an idiot." I was like, "What? Why do I look like an idiot?" So this idiot is going to go over over some Bitcoin price action on the micro time frame, since the macro time frames we've already been covering. We kind of know our thresholds of up down. So a quick summary of that. I will go, I'll stay on this chart and I'll take off all my indicators. So a quick review, same game plan. Outside of, I guess technically between now. So between right now to all of Wednesday, the rules of this line here and how price interacts with it don't apply. So for the typical rules to apply, you have to wait till traditional finance closes tomorrow, about 2.5 hours after FOMC. But the rules, the rules of this line in terms of picking direction of price the entire week to try to, trade with the trend for the rest of the week is if price, even for 1 minute, goes below this line right here, then the direction of the whole week should be down. And again, this doesn't apply from right now to the to 4 p.m. New York tomorrow. And I've discussed all the reasons why I feel that way and feel fairly confident with that analysis in terms of guessing the direction of the price in my last videos. So if you wanted to check out all the reasonings and how to apply that to future scenarios very similar to this, go ahead and check out my most recent video, or even the one before that. I might have covered it there as well, but definitely the last video. But then again, if that happens tonight through tomorrow, like none of that rule applies, right? Okay, so that is essentially the line in the sand for the week. Right now it's above it, so technically, it looks like Bitcoin will want to go up the rest of the week. And other micro time frame type of activity to the upside. So this is another rule that won't apply from now till until FOMC is over and the traditional finance is closed. But the upside rule is you have an extremely high probability of trading to the upside, having the week be green if price, even for 1 minute, can get back above that wick. So the neat thing about this line and this wick right here to establish our parameters of where will the week be, first off, it's only a 2.25% range. So you're not going to miss out on a ton of a continuation move if you wait for those levels. But the more important thing is both of these levels have already been tested once. So this just got tested here, and this one just got tested here. Or no, sorry, here. Yesterday or the day before. So the next time it interacts and passes either this wick up at 20,700 and change, or goes below here, it should get follow through because it would be its second/third pass at it. And the group that's trading that direction, so bears here or bulls here, that would be the threshold where a lot of people from trading the other direction would stop trading the other direction. And some of that group would then flip long or flip the other way, right? Or just simply stop trading that direction. Therefore, the pressure of that would be the threshold when buyers and sellers those are the pivot points when it should take off either way. Makes sense? And again, that rule doesn't apply literally starting from right now as I'm doing this live through roughly the end of the day on Wednesday, November 2nd. All right, because any price action between now and then, it's just going to be for volatility slash a setup for the volatility, and the rules won't apply. And then, am I missing anything else? Let's take a look at the weekly. The weekly is actually disagreeing with my micro analysis, but because typically you can easily get a backfill halfway down a big green candle or a red candle. But if the previous candle is relatively large compared to the other ones, which means momentum in that direction, you can easily get a backfill halfway down, particularly if it aligns with candle wicks and bodies, and it sort of does. Wick, candle bodies. So that point right there would be, but this would probably be hit during FOMC. I don't think that would be hit right now, but this level could easily be hit during FOMC, then it spikes up Thursday, Friday, or next week. But even as low as 19,200 during Wednesday, if that is hit, the true direction of the week still can be up. And again, remember what I said. If that happens Wednesday, if that level's hit not on Wednesday, well, then the direction of the week should be down because it passed this bottom line again, right? So I don't think I'm missing too much on the weekly because FOMC can easily satisfy the backfill. And honestly, the micro timeframes in this line is really where it's at, with the understanding that this is the play range of whales. During Wednesday, it'll keep you safe, and just know that the end of the day, it should land somewhere close to the middle. It usually isn't on both sides. It usually doesn't land exactly in the middle. It's going to be close to it when I backtest how the game is played. But it usually ends up close to the middle, and those all should keep you safe for the next, 48 hours or so. And that is your micro time frame Bitcoin analysis continuation of what I've been saying over the last couple days. All right, now we're going to do Ethereum. I don't know. I'm going to have to give me a quick, I have girls coming to my office saying there's some emergency, like my dog's killing a chicken. Give me a quick second here. What do you need? I know it's full. I can't. All right, not an emergency. I left the water on for my duck pool, and it was overflowing and crazy. But I'm on a well, so the only money I spend on water is for electricity to pump it. All right, let's go to Ethereum. That wasn't to you all. What did I just say? I'm going to skip Ethereum or go to Ethereum? All right, we'll start off with Ethereum. Okay. My previous Ethereum analysis happened somewhere back here, which was last week. And in that analysis, I mentioned, hey, this is a macro origin line right here. And this is an established, I believe, a weekly or even a monthly horizontal, which is a big deal, which from that point was only about a 3%, 4% range here. And when you have two extremely important lines acting as either support or resistance on any asset, oil, black market testicles, doesn't matter, but particularly crypto, like any crypto, if you have two very important lines, so not counting the 1 hour 10 EMA, that's not a super important line, right? Very important lines together acting as resistance or support, and price goes to interact with one of them, price will typically go hit the one that's farther away from whatever the middle zone or, farther away from price. It happens almost every single time. So I made that black triangle here saying it looks like price will hit 1720. But even if it doesn't, it's not going to hit this line and get a perfect rejection as it often does on origin lines. It's going to do a failure pattern above it. And my guess for how big the failure pattern would be was 1720, which is right here. Okay, so these, I still think, honestly, it might not hit it until FOMC. It might just hit that on a wick. But I'm telling you, 1720 is a key freaking level for Ethereum right now. So let's dive in and look at some smaller time frames. So what I'm trying to do now is I'm trying to identify what other groups of different types of trading styles are going to be looking at to make trading decisions on Ethereum outside of what I already have established. So I'm trying to see, okay, do I not have something on my fairly simplistic chart here that will come into play? And one thing I'm looking at is this trend line from, I guess, the yearly lows. Yeah, the yearly lows down here. Down to 800 something, which this hit the origin line perfectly. See that? Like within 1%. It was only, let's see here, 899 or 889, 889. Yeah, it was $9 off. And I anticipated that type of perfect support / resistance up high was not going to happen. Rather, you'd get a failure pattern. This might be a line that folks are staring at. So I think Ethereum is going to maintain the likelihood of hitting 1720 as long as price does not take out this micro time frame low right there. So honestly, Ethereum could pull back pretty hard and still be freaking bullish on the time frames like 1 hour and 4 hour and above. So as long as Ethereum stays above, I would call it right here, 1488. Its upward momentum and structure is still bullish, and which maintains the probability, I think, that 1720 will be hit. So that would be kind of my so this is the juncture, and you can see that this horizontal here aligns with where price would be. Oops, sorry, having a brain fart. So this general area here will hit this trend line. Boom. So even if it hit that bottom trend line, it would still be okay. But this is the pivot point, because people trading horizontals on small time frames plus this midterm time frame trend line, if it goes below there, then that's the pivot point where this flips to be less than 50% likely. That exact point. So, so yeah, 1488 is a key line. That is a pivot in a probability pivot. I might say that 10 times fast. And other people, the way they say that is invalidation. I don't like that word, because it doesn't actually invalidate stuff. Like, it's often used for fake outs and like all that stuff. So I try to view it as a spectrum of probabilities and where something, crosses the 50 threshold. I don't think invalidation really. I don't like that word. But this is my probability pivot point, and it's a line in the sand. So we have an exact point for probabilities flipping, and we have exact targets for where the move likely might want to go. And so if it comes below here, right, even wicks down, myself's big. If it wicks down and looks like it's going to be aggressive coming up, just realize that that point was crossed. This is still improbable, even if it goes below and spikes up aggressively, because it means you're going to be on lower high watch. So if it goes below here and then does something very aggressive, I would still call that being improbable until a specific wick high we're taking out. So if 1720 flips to be improbable because 1488 is taken out, it wouldn't become probable again until this wick up here is taken out. So the probabilities, so again, on a spectrum, right? It's fluid. It could reflip to be probable, but it would take a lot of work. It would have to get back above this wick high to become probable again, because if it goes below and spikes back up, it's more probable to form a lower high. And when that probability becomes not a probability anymore of lower high is right there. So I think that that type of price action in your probability pivots, that covers a lot of range, actually. Yeah, that's 15% of range for Ethereum, and that really should get you through an entire week. And if things do break down below 1488, the next obvious target is this zone. I think this is actually from 2017. So this is all of this is a big line. I think this one's from 2017. This one's from earlier in 2020, I believe. But and so the breakdown, if it goes below there and hits I don't know if it would go. I don't think it would go straight down. But if you become on lower high watch, it hits a lower high and then starts going down. I believe the horizontal 1390 or so is going to be your obvious target. Even though it didn't interact with it very well here, but it did back here. So it would go straight here. So that would be your target to the downside. So now we have established the probabilities are still to the upside. Where exactly to the upside? When do your probabilities flip to the downside? What to do and how to react to price bouncing hard after a downside move, be on lower high watch. And then if it does a lower high, continues breaking down, you got your target to the downside. That would easily get you through 7 to 10 days of price movement on Ethereum. And it feels like I'm missing something though. Probably the week. Am I missing the weekly 10 or weekly 21's in play? 55's up there. Yeah, I did miss something. So something that will actually add to the probabilities being flipped and pivoted is you have a third type of trading group, which will be looking at 1488, because by the time, if price gets around there, the weekly 10 will be at this line. So you have EMA traders, right? You'll have trendline folks, all seeing the same thing with the idea that it'll become support. But if it loses support, two different groups of traders will then stop being bullish because it broke it, right? So yeah, honestly, that 1488 level is probably pretty key. So that's your equivalent to the line in the sand that I have on Bitcoin. So if you haven't watched my Bitcoin portions, then you'll want to go to my channel, watch my most recent 2 Bitcoin videos if you're jumping onto this recording for Ethereum. But this is a very Ethereum and Bitcoin have exceptionally clear lines in the sand. And FOMC Wednesday, November 2nd, that can break rules. So the same idea applies to Ethereum. If this is broken to the downside, specifically on Wednesday, that does not take the probabilities away from this being hit, because every single FOMC, since like the last 2 years that I've back tested, you simply get bidirectional volatility that doesn't necessarily have a rhyme or reason. It just does, and therefore you wouldn't want to apply that probability pivot if it happens on Wednesday, November 2nd. But if it happens on Thursday, perhaps for the second time, let's say on FOMC it comes below here, then gets back in, okay, so that we didn't trigger this being improbable anymore, lower high watch. But if it happens on Thursday, and then you would be on lower high watch. Make sense? And that's how I think everything I mentioned here should keep you safe if you're an Ethereum focused trader. All right. Now, XRP. XRP is about to get exciting, not just for one reason. And so when you have more, like I was saying in the previous portion of this stream for Ethereum, if you have multiple groups of people, so it's not actually people who know each other, right? So people who trade EMAs, people who trade patterns, people who trade trend lines, that type of stuff, or just structure, higher lows on different time frames, or candles, whatever. Those types of groups. If you have multiple large groups seeing something in the same almost exact area, but for totally different reasons, it'll increase the probability of that move not just happening from a probable statistical standpoint, but it increases the chances that volatility will take off. So on XRP, you have this triangle that's very mature in its formation. Technically, it's using it as resistance, but It's holding on, and look at this. Look right there. That's a big ass deal. So I'm about ready to give you a piece of information that might not be useful for a year and a half or two, but if you remember what I'm about to say, this is literally all I did during the around February, March of the bull market. And it worked almost, it wasn't 100%, but it worked almost every time. This cross. This is the weekly big daddy cross. In bear markets and sideways markets, you can have fake outs of this. But in a bull market, when you see the weekly 10 trying to get above the weekly 21 and they've been used as support, that means that asset's getting ready to fly up. So in a bull market, I would be buying on spot and trying to trade this on futures right now. But take that with a grain of salt because you have a few different things happening here. It hasn't been triggered yet. If Ethereum, if XRP can get above this triangle, then you're going to have the pattern traders seeing a breakout of a very, very mature shape or consolidation, which spans 41 days. You can see it behind me there. It says 41 days in the middle. And you will have EMA traders seeing that the weekly 21 has been used as support over and over and over. The weekly 10 crossed up, and they honestly might already be trading up before it gets there. So you're going to have two large groups of people trade. This honestly could be a big one if it gets above there. Take that with a grain of salt in a bear sideways market, because market makers, when there is less trading volume on an asset, which is pretty much all of crypto, including Bitcoin, in a bear market, they're more easily able to put price exactly where they want it on a map and then flip it the other direction. Literally like being the cause of it going there, then coming back, the direction they actually want it to go. So just with a grain of salt, if you are going to try to get involved in this trade, if it is triggered above here, just realize this would be a perfect opportunity for market makers of the big bad days who are creating fake outs to make price get in there, maybe even pull back and then take out the high and then scream down, because it would be, honestly, it'd be perfect bait, like fishing. Like instead of just using a worm, like taking chicken livers, like this is chicken liver bait. But being bait versus the real move, at the time it's happening, it's indistinguishable. You don't know, right? So the only way to do it is to be in the trade and use risk management as it's moving in that direction. Keep moving your stops. That's the only way to do it, unless you're part of the big bad days who are, unless you have insider information on what they're doing, right? So So these are kind of contrary thoughts, but I'm trying to say this to you because I think a lot of people might be looking at this. Yes, it's set up to be a very large breakout. I mean, like macro. This is set up to be big. Like, if I could exaggerate things and try to be, try to hyperbolize the concept. I mean, this is a situation which could eventually lead to, XRP leading crypto out of a bear market single-handedly, similar to how Litecoin did in early 2019. This is a big setup. It could, so that's hyperbole, right? So taking things like beyond what's probable. I don't think that's probable, right? So don't take that out of context. But that would be one side of the extreme on what easily could happen. It could happen. It's not probable, but it could. On the other side, because of all this is perfect, like chicken liver bait for fishing, to bait people to try to trade up before bringing it down for market makers. And the only way to be safe is to, or to try to participate is to, Michael Jordan quote, you miss 100% of the shots you don't take. It's to A, be in the trade, and B, keep moving your stops and keep your risk management up. Because it is indistinguishable being bait and a fake out versus a true, potentially huge move. Cannot tell the difference in the moment it's happening. You simply have to be aware and know when to be out. Okay? And so XRP is about ready to get really, really, really interesting. The cool thing about this is the same could be true to the downside. It could want to fake out one more time as this is crossing and then spike up. Same rules apply. You cannot, at that moment, a fake out is indistinguishable from a true breakdown because this is a fantastic bait as well. It got rejected from the triangle, so it fell out of the triangle, failure pattern, and all these times. Here, let's zoom into there. It never truly used this as strong support since it's failed it. Like, it hasn't been using it as perfect support. Look at this. So even down, use it as perfect resistance though. Look at that. But as it came down, where did it find support? Below it. Failure pattern, where did it find support? Below it. But it almost had perfect rejections, right? When it came back above and went back below, where did it find support? Below it. So the rejections are hitting perfectly, but the supports are not, which honestly, from a micro time frame perspective, without looking at this very bullish potential cross, it looks like it's more likely to go down in a micro time frame perspective. So if that is, if the big bad days are attempting to have a downside fake out before running it up, it's not quite as good as a fake out setup as going to the upside then slamming it down, but it's still a great setup because it looks bearish. Once you get the trigger point of having a probabilistic downside move below here, then people would start trading harder, but that would be the point where they bring it down and rock and roll back up. So be prepared for a fake out either way. And then really the only way to get around it for the upside is to be in the trade with stops. But to the for the other side though, a fake out happening is going to be more obvious because price will interact more heavily with this, and you will be able to see the tiny time frames like 5-minute, 1-minute candles get back above both of these EMAs and bounce on it. Very similar to how my Dixie analysis was from this week. I mentioned very specifically in my Dixie analysis that Dixie is likely to go back up if it can simply have tiny candles. So I think I made the analysis here. I said if the candles can get back above and try to use it as support, then it's going to go above this line at least, right? And that's what it's done. It's used, so not perfect support. This one's pretty good, and this one's very good. And that's what it's done. So the same type of thing would happen on XRP. If it's a fake out to the downside, this is a convenience that you wouldn't have to the other side. You will be able to see with a very high likelihood price interact with this for a little bit. So you know, shit, that was a fake out. It's going to go back up now. Make sense? So that all of that information, should help you be safe trading XRP over the next, I don't know, it might not be 2 weeks like my time frame on Ethereum was. I don't know, until the breakout happens or breakdown happens. But just realize it could be a massive move. And either way it goes, it could be a fake out. The fake out to the upside, the only way to do it, to deal with it, is to be in the trade with stops. To the downside, it'll be more obvious because price will interact more heavily with the weekly 10, similar to how Dixie did. And that is XRP for you. All right. Yeah, the cool thing about sideways price movement, if there is anything cool, is so remember what I'm about to say here. Sideways price action sucks because you can't really trade it, right? It's even difficult on very high leverage. But the neat thing about it is that it's a perfect storm moment where the micro time frames rule. Almost like, a moment where the quantum mechanics are dictating how the sun will heat the earth or something, like going from micro to macro, right? Like, I don't think the quantum stuff, humans don't have the understanding to connect it to the sun. But in crypto sideways movement, the one neat and I guess interesting thing about the way price moves is it's one of the few scenarios where what will happen over a long time is seen specifically on the tiny time frames, even down to 1-minute candles interacting with supports or with a major EMA like the weekly 10. You can see what will happen for an extended period of time on the tiny micro time frames when prices move sideways for 140 days and consolidated like it has. So my channel has been covering a lot of micro time frames a lot recently because that's what's happening. All right. What did I say? Didn't I say I was going to do Doge? Yeah, we got to do Dogecoin. I'm not a person who typically covers Dogecoin. Rephrase that. I don't cover Dogecoin very much on my channel. However, I will here for two reasons. One is obvious. It's the hot thing to talk about, so YouTube reviews, whatever. But from a very sincere standpoint, we have been, my Discord calls and where to be trading has been dominated by Doge and talking about Dogecoin. Because here's the neat thing about it. And again, what I'm about to say, you might not hear very often or anywhere. You could easily hear it somewhere else, but this might not be something you hear often or at all. But it's very valuable information. So listen. No. Let me think about how to say this. When you have a choice between price movement dominated by hedge funds / very sophisticated bots, like Bitcoin, Apple, Amazon, Tesla, right? Versus the price of something that is dominated by the chaos, just pure chaos of mass retail. So retail versus, I guess, traditional finance bots. So TradFi bots. You should, or over time, you should know that the choice should be retail, because over time you will be, as a human, more profitable trading in a mass market psychology setting, right? Rules apply more specifically. When traditional finance bots are whipping around the price of an asset like Bitcoin and a lot of other items in the stock market, Apple, Tesla, all that. Those bots, they specifically run price past a trigger, which would invite people to be short. And then after that trigger's hit, those same bots run it the other way. But in mass market psychology, rules apply much more specifically because you don't have coordination of mass market psychology. It's more beautiful and it's more profitable. So end of rant, but it's very, honestly, if you remember that's why I haven't been trading Bitcoin very much specifically, because it's just dominated by bots right now. Literally, like every single 5-minute candle, it's connected to SPX with very few moments of that switch being turned off. So Dogecoin, the cool thing about it is it's mass psychology specific. So it's volatile, right? But there's a better element of predictability. And if you're trying to click around and make money by trading, profitability plus predictability equals volatility plus predictability equals profitability. And Dogecoin right now, mass market psychology, so moderately predictable, rules apply very well, and it's volatile right now. So even this move up to here, which is its next target, because it's an origin line, I think it's going to hit it. I think it has a good chance to hit it before a reversal. But even so, looking behind me here, it doesn't look like a big move. Let me go to something like the 1-hour candle so we can see this better. It doesn't look like a big move, but from current price to that point, it is 20%. When the hell has Bitcoin moved 20%? It's been a long time. Ethereum recently moved 20%. I think it was on a 30-minute, it happened in a 30-minute candle in late August or early September when the hype of the merge was happening. But outside of that, Bitcoin and Ethereum really haven't even had this size of move. So with that exception, in months, right? And so that's the interesting thing about Doge, another reason why I want to cover this. All right, so honestly, Doge might be where it's at right now. Especially if you can deal with it or trade it on an exchange where you have enough liquidity per how much money you're playing with in your account. All right. So here is what's happening with Dogecoin. You are fortunate enough to have me just got off a VIP call where I talked about this. I was able to think about it for a while. There are going to be multiple, I deleted the wrong damn thing. There are going to be, so I don't trade like this necessarily, but this rotated rectangle here is going to be an area of interest because of the yearly low plus multiple wick highs. They create a range into which Doge just zoomed past. So a pullback before it hits this level up here, assuming it does, a pullback should be within this, correct? Right? Okay. So what you could do is you could this goes back to June. So what you could do is you could treat this as its own trading channel and essentially make like a midpoint line in it, which honestly interacts with price pretty well. So for pullbacks, you have three major options here. So now we'll go into the micro time frames. We're getting a little too busy here, Tim. We got too much shit going on. Let me get rid of this stuff. I think that was somebody else's line there. All right, there we go. So on this chart, we only have three items outside of price. You have an origin line, which is the most macro you can get out of anything, right? Because it goes back to the beginning of price history. You have another origin line here. And then you have this midterm time frame trend line, which a lot of people are going to be looking at. So if Doge pulls back, okay, down to the top of it, then you have micro time frame plus midterm time frame higher low structure, which it might easily result in a bounce up. So let me do this. So the micro time frames, you would have something like this trend line here. And if you, actually, no, it would break this one. You could wick below the micro time frames, break this trend line, but then hit a midterm time frame and you're still in an uptrend, right? So you have multiple options on where a pullback could be before the eventual target for a 20% move could be. You have the micro time frame, which sometimes dominates the way price moves. And it just depends on which group of traders wins. Micro time frame will buy back here because everybody will be looking at this line. Okay, micro time frame line. I'm on the 5-minute candles. If that fails, then folks from a midterm time frame perspective would easily see this point right here as an entry. Despite the micro time frame people saying, "Oh shit, it broke down," right? Midterm time frame people could zoom it right back up and could still hit the target. Where this target up here starts, where you start having a probability pivot. So this becomes not 51% or better probable anymore, this target being hit. The probability pivot, I would say, happens at the middle line of this midterm time frame range. If Doge pulls back below here, then I think this becomes less than 50% likely of being hit. And any upside move after that, you are specifically looking for a higher low watch. And because you have this very convenient micro time frame line here, which is support, the lower high would likely hit that line. So you actually know where to look, right? So to the downside, we have extremely specific targets of what and where it is and what it means. Down here, still bullish. Down here, still bullish. Here, it's a 50-50, but if it goes below here, if it comes back up, you're going to be looking for a rejection, perhaps either from this line here or that one. You're going to be on lower high watch after that, because I would interpret this going below here. That's where your probabilities of this being hit pivot, and the probabilities would flip that was it. Like this move, that was it. It just came up shy of my origin line, which sometimes happens. But usually my origin lines get hit pretty well. All right. And so this should keep you safe trading, trading Dogecoin for quite a while, but Dogecoin is on an even tinier micro time frame. It's doing something pretty cool. So if you want to dive into that, if you're looking to do something tonight, you have to zoom in even more. So I'll go to the 3-minute chart. Maybe I should go to an exchange with better liquidity so we can actually have candles freaking touching each other. There we go. All right, so now we have a bare naked price chart. Yeah, this is way better. I need to kind of convert my stuff over. I don't know. I was clearly charting this on an exchange with not good volume. All right, so on the very, very micro time frames, you have what pattern traders call an inverse head and shoulders pattern here. It's honestly a perfect one. But the way I see it is, for the time frame you're identifying an inverse head and shoulders, all it means is potential trend reversal. You go from lower lows to your first lower high, and that's what creates the inverse head and shoulders. It's just a trend change. And it's the first higher low after having lower lows. Lower low, lower low, lower low, lower low, higher low. Inverse head and shoulders is the result, typically. Sometimes that's broken. If it screams up, makes a higher low appear, then you have a trend reversal without inverse head and shoulders. But among trend reversals over small time frames, large time frames, whatever, but particularly small time frames, this is among the most common way to get a trend reversal, right? And Dogecoin on the micro time frames, it is interacting with what is called the neckline. So right now, the bulls are trying to pierce price above this because they know once that is broken, the current people selling into this and trying to make it go down, the bears, most of them will stop taking on positions, and that will take the sell pressure. So right now, the sell pressure and the buy pressure are about equal because it's going sideways, right? In general. Like this, buy pressure, sell pressure. So after this point right here, if it can get above, especially on 1, 2, 3rd, the 4th attempt, but really on any of these attempts, as it goes up, people contributing to the sell pressure, they will be smaller in size. They won't be selling as hard. And that means price would race up and bust through there, even if more people don't add. So the amount of buyers as are right now staying the same would still make price take off. Because look at the vectors, up wins. But the neat thing about such obvious targets is from the original group, like right now, up and down, so buyers or bulls, bears on the micro time frame, a lot of these people who stop acting as sellers at this point, looking for a breakdown, many of those people who left from here to here, I wouldn't say the whole group, but some of that group from this point to this point of the disappearing vector of force, some of those will instantly flip bullish. Therefore, this actually gets bigger. So at this exact moment, you have fewer sellers and instantly more buyers in a heartbeat. And this is an exciting, honestly, this is tradable potentially today. This is a pretty mature formation for a micro time frame. So either way, I mean, Doge right now, I don't think I want to guess up or down quite yet, but you have a very clear area on when it'll take off. Therefore, if you wanted to guess up now, and if somebody, so this is not, I'm not inviting you to do so. This is not financial advice. Me, for example, if I wanted to trade up, I could potentially make the choice or the strategy to enter now, or enter out with limit sells between here, and simply set my stop, below these candle bodies here, and just call it a day. I have my stop set within 1%. Depending on the amount of leverage, you probably wouldn't want to do this on high leverage because 1% on high leverage, I mean, that's a big loss, right? Really a big loss. But on 15x or lower, you can easily set that up and set your stops and then walk away fairly safely. To the downside, though, you could kind of do the same thing. You could technically enter here as well, guessing it's going to break down, and set your stops above that wick high, which should be also, around 1%. There you go. So if you're on a platform which allows you to take on contrary or opposite positions on the same asset, which many of them don't, like KuCoin Futures doesn't, one website that I'm using now does. You could technically, somebody here, you could technically take on both positions, set your stops, and walk away. You really could. This, and again, I'm not inviting you to do so. It's not a call to action, not financial advice. This is just a very interesting setup where that could be an okay strategy. In that strategy, though, the failure point of it means you get stopped out of both. It can happen, and it does happen, because people taking on both positions, setting stops, it happens all the time, and bots know that. So you could easily get wicked out of the short, wicked out of the long, goes back in the middle, then takes off, or then breaks down. It could easily happen. So it's, with that, if you've never had that idea, oh my God, take on the same position at the same point, set stops. It sounds like a cure-all, but it's not. Trust me. I've done it many times. A lot of times it works, but it has a clear failure point. You can get stopped out of both scenarios, and depending on how widely you set your stops, because you think, okay, if I'm losing that whole 1% up on a short, well, I'm gaining on my long, right? So it equals out. So why don't I just set my stops really far apart? Because as it goes up, I'm gaining on the other. Well, what happens if you go take a crap and come back and you're wicked out of both? Right? It could easily happen. So it's not a cure-all. Don't be enticed by that. It's but that would be an okay strategy for this. So Dogecoin right now it's looking pretty cool for all the reasons I've stated. It's in an immediate decent setup. From a larger perspective, right now it's dominated by retail and it's volatile. So volatile / predictable. I think Doge is where it's at right now. I never thought I would hear myself say that, but in terms of being opportunistic, I think this is the best one to be looking at for now. All right, that's Dogecoin. Let me check on my Matic trade, see if I got stopped out or not out of that 1 hour pullback. Yep, I did. But I had a very tight stop, and within 0.2 of 1%, so no damage done. Yeah, this is honestly a fantastic setup. All right, here we go. Let's start looking at questions. Okay, so anybody who is joining, either recently joining Cryptillion tier or a tier on YouTube or a tier on Discord. So I don't want to, I want to be clear with what you should expect. For Discord, since price movement of crypto is a lot of sideways, my setups are not coming in form of posting stuff as I have done historically. Rather, I have a lot of live time on Discord, perhaps more than maybe any other content creator out there on their Discord, morning and evening, and in the middle of the day. And I have my calendar posted on Twitter. It's pinned to my page. So the way we are doing trade setups within my Discord community right now, mostly because it's a lot of sideways movement, and I feel it's a lot safer for me to conduct, I guess, business that way. I'm not just being lazy. Our setups are being done live, similar to how I just covered on Doge. Like, hey, this is a great setup. Or what we did the whole VIP chat today is we were just scanning for the best setups. Even one person talked about one that I'd never heard about before, Clay, and it happens to be on the crypto bubbles, and multiple VIPs were playing with it. And I was like, damn, that's a great setup. How are you both looking at the same thing at the same time? And so on top of, even outside of my the live calls where we hunt for setups and try to make a game plan on where to enter or how to enter now. So not every trade is enter now. Some of it, hey, it's probably not going to hit this for a week or a day or whatever. But on top of that, then we have a lot of VIPs congregating and creating their own trade setups, things that I would never even look at because I don't look at a ton of altcoins. they're hanging out and sometimes using the video voice chat channel, so they don't have to be typing back and forth. They'll take my live room when I'm not in there and be discussing trade setups and how to set their stops and where to take profit. All right, but on my Discord right now, I'm not posting a bunch of trade setups for the reason of prices just sideways, and it's too for me to do that. It's just too dominated by bots right now. All right, so we do it live, and we got a lot of opportunity to do it. All right, here we go. Hello, Tim. I have, and also for expectations, the way a lot of people go on to the live calls, and outside of looking for setups, another most common denominator is they're already in a trade. They have moved their stops or planning to, and hey, take a look. This is my entry. This is my leverage, and as a group, plus me, we can identify, you know what? I would probably wait to move my stop up at this point, so you can have like 10 people looking at your trade, and that's another big benefit of the live shows. All right, on Discord specifically. Okay, here we go. Hello, Tim. I have in mind 4 potential bottoms for Bitcoin: 10 to 12K, 14 to 16K, respectively. Okay, specifically 10, 12, 14. Honestly, those are kind of similar to my bottom targets too. But I would say 19.6, 12.1, 14 almost exactly, and then maybe a little lower than 16. Or even 16. No, 16.4. 16.4. That was like my original favorite, even when Bitcoin was up at 40K. And I gave a bunch of reasons why 16.4 seemed to be the best area for a guess. Okay, yeah, so so the 10K aligns with one of the last gap fills at 9,600. 12 aligns with 12K aligns beautifully with 12K aligns beautifully with Bitcoin in 2019 and 2020. All this area here, that's your 12. All these, 12 is like this. Yeah, this guy here, this guy here, this guy here, that's your 12. 16.4K is here at this structure. No, it's this one right there. Yep, 16.4, that wick right here. Yeah, so all your levels really align with a lot of stuff I'm looking at too. So those are all good levels. What chance would you give each one? And if you disagree, what's your... So yeah, per your question, I agree. Those are great levels. A chance? I don't know. I mean, I think intuitively, the middle ones have a better chance of being right. Just from an observation standpoint, because of the distance away from price. So if you're going to get another downside move, 16.4 is super close. So the chances of momentum of the downside taking it through are increased because it's so close. So 16.4 being here, I think that reduces the chances inherently compared to the other ones. 9,600, the gap fill, a gap fill that a lot of people are looking at down here. That might be slightly, I would say that would be my second most probable one. More probable than 16.4 at this point. But I think it's not the first or second most probable because it's simply farther away from price. So the middle two, having tons of support here, they're not as closely knit to price, therefore momentum could stop by the time they get there, right? So it's not too close and it's not too far. It's mama bear chair, mama bear porridge. I would say the middle two have a slightly higher probability, 12, 14K. Just from that standpoint, just kind of, it's too far away, it's too close. Oh, here's in the middle. I think it increases the chance from that perspective. That's very loose statistics, but that would be my answer. Because I don't know if there's really a way to give a good answer on that, but that would be my guess. All right, and there's also a possibility that the bottom's in. I don't think that's close to probable yet, but I mean, just remember that I've been ranting and raving. The bottom on Bitcoin cannot be in, like within reason, but cannot until the equator line or line A on Nasdaq futures has been hit, and that's close enough for me. So because it hit that and bounced so aggressively, so I had this here, like before all this happened. Like, it's been months. I've had these lines here for a long time. And kind of making fun of all the news people who, like on CNN and Fox Business, saying, "Oh, the rally's over. Now's the best time to buy," and all that stuff. Like, no, it's not. This needs to be hit. And actually, this is more likely going to be hit. Very likely still going to be hit. But there's no chance of a reversal, macro reversal, until this is hit. So Bitcoin held on to its low the entire time and did not go lower here. And that has been satisfied. So although I don't think it's nearly 50% chance the bottom's in, but I have to be non-biased here. I have to be objective. The chance of a bottom being in for Bitcoin has increased drastically because of this. I would say it could be as good as a 1 in 4 chance at this point, maybe even 1 in 3, which is a pretty big chunk of probabilities. I mean, 33% is not small. You have an operation, 66% chance to live, 33% chance to die. You're not going to be saying, hell yeah, 66% chance of living. No, you're going to be like, oh, fuck, I might die, right? So put that inverse, like it's a pretty big chance that Bitcoin's bottom's in, but it's not probable at this point, in my opinion. So among your 4, I think current low of 17.5 is a contender. It's not my favorite, but it's definitely a contender. Because of this chart, Nasdaq futures, and Bitcoin just freaking went sideways. And again, I've gone over on my channel my theory behind why Bitcoin went sideways as Nasdaq was going down, especially during this move. And my even though it automatically by default adds probabilities that the bottom's in, there's also a chance that Bitcoin is simply being held up during this down move. Because if Bitcoin continued moving with the stock market during this move, it would go below a specific threshold that the whales don't want it, because the whale's true target for a bottom, Bitcoin would have already gotten too close to it. And if Bitcoin had not leveled out as this all happened to the downside in stocks, then Bitcoin would already be too damn close to that point. So they're holding it up while all this was sliding down. So for the next move, when Nasdaq futures hit this point, which is very likely, I even have a timing on it, late in the year to early Q1 next year. As that slide happens, then Bitcoin will not surpass, their range where the big bad days want price to go. Does that make sense? So there is I have a counter theory to why Bitcoin is looking so strong, particularly over these last 140 days as stocks went down. And even the indices. So, but those are contrarian thoughts. All right, here we go. So, hey Clay, how you doing? Welcome to the Cryptillion Club. I'm trading hodling KDA and Flux. Those are 2 pretty good choices. KDA and Flux, would love updates on those. Okay, well those are 2 I cover on the live chats anyway, so let's go do it. I'm gonna try to keep this one shorter though, because I don't think much has changed since my last analysis. So if you're a fan of those, you can go, honestly, it might be entertaining. Like, you might look at the last 4 videos, like watch it on 1.5, 2x speed or whatever. Because those are 2 coins, my analysis have gotten pretty damn well. And they've moved as predicted. And so the value in that is you can apply my strategy and reasoning for guessing why price would move that way, right? And apply that to the future. So there is a lot of value. Like, there's a ton of value in looking at previous videos when price has already played out to understand how did this person accurately or roughly accurately predict this, as opposed to always leaning on somebody predicting the future. Sometimes it's just as well. It's just as valuable to use the back information, the already happened information, to make sure that is in your head for the next time that setup happens. So you don't even need to refer to somebody like me You already know, you already know how to analyze price when something like that happens. Make sense? So if you're a fan of those coins, I have done a good job on those, better than other coins like Quant. I would challenge you to do that. It'd probably be pretty helpful. All right. So anyway, let's go to KDA. Brain is not working. Which bucket do I have her in? Oh, here we go. My cursor was on it. Okay. KDA is an asset, and with price action, horrible intro. Let me think about that one more time. KDA has been moving almost exactly as I've predicted for quite a while. Hasn't been too hard to predict because it's going sideways. So let's go ahead and take a look at more of a timing aspect on when sideways lack of volatility will expand. That's really all you can do on KDA right now, given that its price is literally falling exactly, almost exactly where I've been thinking it's going to go. So the most value that I could add on top of that from my previous videos, which anticipated price going into this triangle, writing this trend line, interacting with this as resistance. That's why I made this triangle before it jumped in here, and this is exactly what's happening, right? And I mentioned that if it goes in here, it won't break out until this purple line, which is the first of the month. So in that, I think it was 2 or 3 videos ago, where I said, I think this is going to happen, and the volatility won't increase until after the monthly, the October candle closes and the November opens, right? Which is the same thing. Happens instantly. So it has met that. Now all you're looking at is you're going to need to have the origin lines too. So here's KDA. I think you can fit it all on a 4-hour chart. Nope, 8-hour chart. Yeah, so here's KDA on an 8-hour chart. And you'll want to try to do your best to do origin lines like mine. Absolutely feel free to copy them. Don't need to credit me, anything like that, because most people, at least who are on my channel, know that these are my thing. If I can have a thing, but copy them, right? And then once you zoom in after copying them on a larger time frame, like daily or 8-hour or whatever, then you're essentially dealing with one origin line that's being touched right now, with this horizontal that's right here. So all that you're looking for is a breakout above $1.40, which it's already tested once, or the bottom trend line, but I can't give you one price level because look, see how it changes? I can't give you one price level. It's an origin line, it goes up, right? It's slanted up. So you need to draw the line. It's not one level. And the volatility will expand once it goes past either this origin line being used as support or $1.40. There are 2 main ways that price will break up and out of here. A, it'll get above and then come back and use it as support. So it could be a big break. It could be 10%. And if you see price not interact much with $1.40, but then go up to $1.60, just realize it's probably going to come back down. You'll likely have a re-entry point if it's going to stay long, right? If Bitcoin's heading down as, KDA comes back down to this, I wouldn't try to use that as support and trade long. But 2 main ways that this could happen. You would see a breakout to the upside. Price conducts what I call a punch high above an area of resistance. But a punch high implies you don't consolidate under it. It implies that specifically. So punch equals no consolidation just under it. That's what I'm getting ready to cover next. So regardless of what this does, gets in an uptrend, punches through, comes back, finds support somewhere here, maybe even overshoots this, forms an uptrend, gets on top of it, maybe tests it a couple times even, but once it takes out the punch high, that's when it'll accelerate to the upside. So the way this works, it could easily stick the landing perfectly. like this. Okay, that could happen as well. But regardless, you'll have a punch high. It'll come back down to test 140 almost exactly. And you have your probabilities of trading up with confidence. They just go exponential is when the punch high is taken out. That's one way you'll see price break out up. Another way you can see price break up is if it can put time somewhere here for a while. And then if it breaks above, then it doesn't have to come back down because it already bowed down with respect to that the 140 line. You can respect something from the top or the bottom. You just usually have to respect the line before you pass it. And to the downside, it's not going to be quite as clear. I don't think. But the upside move will be a lot, I feel it'll be a lot clearer. Because here you're going to have horizontal people muddying up what's going to happen. Because no one else really has this line. And if they do, it's not, they might have it on a micro sense, but they're not going to have it drawn back all that way. So the thing here with this is you do have an obvious horizontal consolidation, and a lot of traders, they're going to trade down on this sucker once this area right here is taken out. So, hell, maybe the same thing would happen. So if you're trading to the downside, you're going to need this horizontal on here, because to the downside, you could easily have price come outside and down below the triangle, use it as resistance, take out the punch low here, but then find support from a different set of traders defending this horizontal, and then it works its way back up. So because there's a different set of traders with a different yet obvious area to defend as bulls, the typical way that price breaks down out of a shape, it's not going to be as dependable as to the upside. Does that make sense? So really what you're going to do here is it might be safer to essentially put a triangle on a triangle. Once it breaks out of this triangle, yes, the idea of getting an entry becomes better, but trading one specific way after that triangle is broken doesn't become obvious until this triangle is broken. So breaking the bigger triangle, that's your heads up. Okay, begin being interested. Probabilistic flips to the upside or downside don't happen until this triangle is worked out of, because a different set of traders will be looking at that. So it kind of muddies the water a little bit, but still you have another triangle to look at. So just keep aware of that, and that should get you through with KDA to the upside and to the downside. And anything in the middle, well, it's just the middle. You can't really do much there because it's too flat. All right, and then Flux. Flux is also in a triangle that I anticipated it would. That's weird. I was just covered KDA on a live stream. Now I'm on Flux and went from KDA to Flux because one person asked, chat or Clay Bomb, and before triangles happen on either, I drew it, and they're both still in it. So my guess of sideways for both of them has happened. So the same rule essentially applies to Flux as my KDA analysis, minus I don't think the horizontal, the horizontal is not as clear cut and dry. So the trade on this will actually be easier than KDA's if it breaks down. You'll have a more friendly threshold. All right. But both of these, but inversely to the upside, Fluxes will be more challenging, just like KDA's downside trade will be more challenging. So trading Flux to the downside, you have a more obvious and friendly threshold, because there's not much else just below the threshold that people will be staring at and defending. Different groups of traders who don't use origin lines like me, because I'm the only person on earth who calls it origin lines and uses them, right? But there's nothing else obvious just below. So a breakdown below this, it'll probably take Flux down into the 50s. If it takes some time to get there, mid 50s. it would hit the next origin line down. Clearly, if you go below here, you can have a big rally back up to this origin line or even a failure pattern above and then come back down. But eventually, over the 30 days, you would probably hit this next origin line down. Okay? If you're new to my channel and don't know what the hell I'm talking about with origin lines, right here. They work exceptionally well. And they're called origin lines because they go back to the origin of price. And that's why if you're watching, even for people on the stream, but folks watching this recorded video, this is when you subscribe to the channel because you're seeing something on Flux you won't see anywhere else and something that works very, very, very accurately and you won't see it anywhere else. And go ahead and if you're new and subscribing, hit the bell for all alerts because I'm going to keep you in the know because I cover Flux quite a bit. All right. And then for folks on the stream, go ahead and do the same darn thing. This is your moment to help out your content creator here so I can continue making these videos. Okay. I mean, hell, even go down to the 1 minute chart. I mean, this origin line's been here for weeks and weeks and weeks. I mean, that's clearly what's being interacted with, right? They're very accurate. Okay, so with Flux, the breakdown is clearer. You'll have to pause the video where I had my origin lines all zoomed out, try to make them the best that you can, but just realize the current one, price came up a bit shy of it. Just a tiny bit, but that's actually where I thought it was, where I wanted it to go. I guessed that level almost exactly before it hit. I did not guess a 40% rally afterward, but I would have guessed it was going to just stop here, but it went a little bit over the target. All right. So downside move, very clear. The way price would move there it's going to be, you have two general options. Either you come down here, toy with it, flatten out, and then accelerate as you go below it. Or, in my opinion, slightly more common way to break down below a resistance point is you start coming closer to it, you do a punch low, you have an initial punch below it, then before bears really, really get into selling it and trading down, you'll have a rejection, maybe some lower highs, but when you take out the punch low, that's when you accelerate to the downside. Maybe the punch low wouldn't be quite as far down. Let me move. Maybe like this. Yeah, so once you take out the punch low, that's when it'll accelerate. It'll happen if it breaks down. It's a very high likelihood it'll happen in one of those two ways. To the upside, just like Kadeena's downside out of the triangle will be more challenging, Flux's upside will have an immediate obstacle after the breakout, which could create it to keep going sideways after a breakout. It might not be a big breakout because of this origin line. And you can see that this origin line already was a rejection. So people without origin lines who are only looking back a month in price, they'll see about the same line and it will invite sellers to come in. So even a breakout here, what is very likely going to happen is you're going to get a pullback from that area, wherever it hits. If it hits sooner, about 84. If it hits later, 87. But you're going to get a pullback. And reversals start with a pullback. They look like a pullback as they're happening before you can tell it's a reversal. So because I'm not saying a guarantee pullback from this origin line, but because it's very high probability of a pullback from this origin line, that could, and we're in a bear market where Bitcoin could let go at any time in the stock market, you run an increased chance that this breakout doesn't live very long and it actually breaks back down and then goes below the triangle. So if you're trading upside long, you want this origin line here or just this trend line from these recent highs and realize, hey, if it hits here, I need to make sure my risk management is now fully in profit in case it really does reverse from here. I automatically, I'm still in profit no matter what happens. Keep it instead of saying, hey, this is going to the moon. I'm setting no stops. I'm in profit. And in that case, you not only lose all your profits, but that position gets liquidated. And if you have it on cross leverage, your entire account in that futures could be liquidated. So make sure you don't have cross leverage ever. If you ever see the word cross on a platform, hey, it shouldn't be there. It shouldn't even be allowed for retail people. Well, maybe not allowed, but it's horrible. Switch it to isolated. So we're just dealing with two origin lines with one horizontal with flux. So the breakout zone for this would be very similar to or the opposite of what happened here. Either you consolidate under, then break out. And if you consolidate under, then you don't need to retest this. You don't need to come back down to touch it as support before breaking out. Or you get a punch high, just like a punch low down here. You'll get a punch high above. It'll eventually find this as support and then take out the punch high and then race right up to here. It'll be the same way. So you only have three things: 2 origin lines and this horizontal for flux. That'll very likely get you through 2 whole weeks of trading safely with the right ideas in mind. All right. SPX. Oh, not a crypto. Yeah. SPX it's kind of challenging right now. All right, crypto guy covering traditional finance. This is SPX. And again, if you're watching the recording of this, I'm doing this during live stream, but if you're watching the recording and you're new to my channel, you can tell right off the bat that you're not going to see. You probably haven't seen a chart like this on SPX from your traditional finance sources, and it helps make muddier waters a little clearer. And because I'm showing you something that's new to you and works, that's the time to go ahead and hit subscribe, because I do, as a crypto person, I do cover a decent amount of traditional finance, and really traditional finance, Dixie, all that dominates about at least a quarter of all my Discord and community gatherings here. So now that we've zoomed out, you know what we're working with. It's a trading channel, right? That goes to the very top of all-time highs for the stock market. Price right now is interacting near the top of it. I'm going to zoom into the, let's say, 5-minute candles. And we have one horizontal. So we have channel lines, which obviously are working pretty well, right? Support for pullbacks, resistance for the pumps. These lines have been here for months. So they're real, right? Even though you won't probably see them anywhere else set up like this. First observation, I'm going to put 2 observations together that are contrary, they're opposites. This smells like a fake out to me. However, looking at it this way, without that in mind, it's still in a very nice uptrend. And to get to the top of the trading channel, now that it's in an aggressive uptrend with very healthy looking pullbacks, it has an entire 3.33% run before a lot of sellers are invited, which means converting current bulls to sellers, right? Or turning sellers into sideliners, taking away buy pressure, or just having sellers step in harder. That's a lot of racing room until many groups of people are going to become sellers for different reasons, but all roughly at the same time. To me, this looks like a fake out, but I can't deny both the wiggle room that it has to the upside, plus it's in a nice uptrend. So with those contrarian observations, my analysis for this would be, when do my probabilities flip strongly? So a probability pivot. When does it favor strongly one or the other? And that's all you can do. Because this looks like a damn fake out. It's going to come down from here, but everything else says it still has plenty of room to run. So the way I would approach this is here. SPX breaking below $38.40. The chance for upside movement or breaking or taking out this high and continuing the rally, I think this is roughly the 50-50 threshold. But after it crosses this threshold, the probabilities of this being hit do not plummet too quickly, because from here to here, it's under 50% of that being hit, in my opinion, but it's not much under 50%. So you have a larger shade of gray where you kind of have an improbability zone. You still can't quite tell. You have a small edge, but not a big one, because immediately below this, I think this is a weekly horizontal, is the weekly 10 EMA, which gets a lot of action on the price of anything or any asset. And as it comes down here, as SPX comes down here, it takes some time. By that time, if the weekly 10 is here already, then you can forget what I'm saying, right? But if it happens soon and the weekly 10 is still not at 38.40, then you have a shade of gray where the probabilities are in flux around close to 50-50. Does that make sense? However, if we're fortunate enough to both get downside movement and it happens when the weekly 10 is either at or above this level, then really you have an extremely clear probability pivot point. And it kind of looks like price won't go below here until the weekly 10. Because multiple groups of different types of traders are going to be having the same thought for different reasons at the same level, same time. EMA traders see this, if price goes below the weekly 10, okay, bearish. EMA people, bearish. Horizontal people, comes below here, bearish, right? But if this happens soon, just realize that the probabilities do not get great immediately. So watch out for that. If we have a big down, especially during FOMC, it could easily come down. Hell, FOMC, it could come all the way down to here and still be bullish, because price just whips around with volatility for the sake of volatility only. And to grab positions that market makers are wanting anyway. Drive price down into their longs, or conversely, drive price up into their shorts before taking spot price the other way. Okay, that's to the downside. We have three key points. For Wednesday, all three of these points. A, the horizontal, B, the weekly 10, and C, only on Wednesday. Outside of Wednesday, this is not a clear point. But FOMC could easily have price come down to here, okay, and still bounce, and probabilities are still okay to the upside. On Thursday, though, let's say by Thursday, the weekly 10 is already up here, then price goes below it. I think your probabilities automatically pivot, and any rally up, you would be expecting a lower high. Most likely, at something obvious like this channel line right here, could go as high as this, or something more obvious to other groups of people, probably hell. It could just be a lower high. If it breaks down to here, comes up to here, it could get rejected from this point. But after Wednesday, if 38.40 is broken, I would be on lower high watch after that, because I think the probability's pivoted. Right now, I think the probabilities are favoring more upside movement, and this is exactly when they change. When you have a flood, so you're going to have a flood of buyers in this triangle right here to the upside. You have this horizontal with this channel line. So you could have the SPX get stuck in here for quite a while. And remember, in crypto, the last two triangles we looked at that I anticipated were going to happen, both happened, and price stayed in it, right? KDA and Flux. So maybe I'll go 3 for 3, but honestly, on this one, this isn't my main guess, but it could happen. So when your probabilities flood heavily to the upside in terms of, hey, I can trade this direction for more than 5 days, more than 2 days at a time, is I wouldn't get too excited necessarily at the channel line, because you have immediate resistance ahead, which could invite sellers, and it breaks down below. So I would have my main upside, threshold of, hey, I can trade moderately safely with a good edge when it crosses 3,900. Does that make sense? But this triangle, the importance of it is don't be too excited if price breaks above this channel line, when typically you would be, but you have this right above, so therefore view it as a triangle. And the benefit of viewing it as a triangle is it helps you anticipate when the bulls and bears get into a battle that neither wins, well, what does price do? It goes sideways. And oftentimes it forms a triangle. So the benefit of that is it helps you anticipate potential sideways movement where trading is not quite as beneficial because the moves aren't quite as big. And really, that's it. So if it can break up above 3,900 even, then, I mean, price really should race up to the top of the channel line, which is descending. So the longer it takes to get there, the lower the number, right? So if it takes, until November 9th, that's 3,967. If it does it sooner than later, that's, almost 4,000, right? Because it's a descending line. And to the downside, a break below, what was it? 3840. With the assumption the weekly 10 is already here at that time. If it happens, if it's already there, then you have fairly immediate support. You would expect some type of bounce here, but you would be on lower high watch and then have lower targets after that. If it happens tomorrow on Wednesday, just realize the SPX will probably end up close to where it began before the volatility started. So I would not allow these thresholds being broken on Wednesday during November 2nd to be thresholds to trades, with confidence in that direction the rest of the week. All right. And that's SPX for you. What's been going on with Trias? What's been going on with Trias? That is the question. It's a great question. Dogecoin and Trias, I mean, really are kind of the hot topics within... oh, shit, it hit that perfectly. Wow, when did I draw that? Well, what's happening is it's hitting my targets exactly. Now, even though I did anticipate a bounce literally here, right? Because I've had this here... since the time people said I was an idiot for having this box here, and then months and months later it bounced off of it. I did not anticipate a bounce this high. But once I saw that it was an aggressive bounce that got over the weekly 10, which is this red line, this was the next obvious spot, and it hit it and pulled back perfectly. So to answer your question of what's going on with Trias, it might be, honestly, it might be the team using TA to set up an opportunity to release news, which honestly is pretty good. It's not a bad idea. It's nothing bad. If I had to guess, that would be my guess. So, for example, like Richard Hart, even though I'm not speaking for him, I'm making a guess about, was it Pulse Chain that he has coming out? Why would you release a project with a token, connected to it? Why would you release it in a bear market? Wait till price is up, right? That makes sense? So take that thought in terms of planning, a business or the price of the underlying stock of it or token of it. And okay, well, my token or my stock or whatever will perform better if I take my plan A and simply move it along the time axis, the same plan A, but if I do it on the time axis over here, the same plan will work better than if I did it over here, right? I think the same thing might be happening with Trias. If I had to make a, not a conspiracy theory because it's nothing negative, it's just what I would have done too. Everybody's looking at this. If price went below here, then it's all-time lows, price discovery down. Like Trias people would be, shit out of luck because it would hit like 24 cents if that were to happen. Therefore, everybody, or who is involved with Trias, well, I mean, most of them have seen my channel anyway because I cover Trias probably more than anybody in the world. I think that might be a true statement. But also, so I've had this here for a while, right? And I've for months and months and months, but it's going to be heavily defended. So perhaps the marketing team already had something brewing way back here, and they chose to release it after they saw this being defended. Therefore, the momentum of people defending this, plus the whatever news release they had, something about, I don't know if it's with South Korea or something, but they released something that was, pretty pivotable. That's a great word, pivotable. which is marketable, which is fundamental for the project, and which could mean, good news for investors long term. So if I had to guess, it's a mixture of both of those things. I think news of that was just released around the time of an expected bounce, which means their team is paying attention to price, which if my theory is right, it's nothing but a good thing, because that means they're kind of looking out for you too, right? Because most people want price to go up. Well, if you want price to go up, let's make it go up harder, so let's time things correctly. Again, everything I'm saying about my theory, it's just a thought of mine. I have no evidence. It's not negative if it were true. So I hope, like one time I mentioned something about VRA, and VRA people are like, I got a lot of shit. So nothing I'm saying is based on evidence I have, necessarily outside of the charts. And even if it were true, it's not negative. So don't freak out. But that was the question, and that's my answer. If I had to guess, it's a mixture. It's the team paying attention to price action. I lost my train of thought in there. One thing I was going to say was on different Reddit channels and all that stuff about, what teams are doing to help us investors out. One of the biggest complaints in all of crypto, Reddit or wherever, or crypto Twitter, specific to the teams, the founders, is they don't care about price. Like, we're just going to, keep working through. Well, maybe you should care about price, because it obviously pisses a lot of people off. So if my theory is right, this means the Trias team they do care about price, which means they care about you. All right? That is my guess. Now, could this be a reversal point? Yeah, that's an obvious place for this to reverse. But let's see if it's going to slow down. When would I say that the probabilities flip of continuation to the upside versus the downside? So right now, I think the probabilities are up. I don't think there's any reason for this to come down more than a healthy pullback. So actually, no, you have a very clear-cut and dry area. So you can see what this is going to be aligning with, right? This trend line that everybody's going to be looking at. So once it's broken, people will become sellers, right? And if it's broken, if you get a rally after that, then it's more probable that you're going to make a lower high. All right? But in line with that, so a lot of things are aligning with the freaking weekly 10 in this live show. Man, this is really strange. Like almost every single thing I've covered, the main line I'm looking at aligns with the freaking weekly 10. Really, really interesting. But that's what happens when crypto goes sideways for so long. Everything is jammed together, which is why the lower term timeframes are dominating everything. So with this, you're going to have two different groups of traders seeing the same thing. Trias could easily come down over this week, or even the next 8 days, roughly to the area of $1, let's say $1.20, $1.18, and still be probable to the upside. Where your probabilities begin getting slightly less than 50% to the upside is when this happens. So if it breaks below, comes up, gets rejected, goes like this, does that automatically mean breaking above this high is impossible? No. It just means it's improbable, right? It still could happen. It just means it's not the most likely thing to happen. So don't bet on it. Like don't bet your house on it. But yeah, this is my pivot point. This trend line right here. It's not one number because it depends on when it'll hit it. I can't give you a horizontal. And really, to the upside, it's a clear-cut pivot as well. It's just taking out this high, and it should accelerate. So it could get stuck in here for a while, but it honestly might be more this line. Actually, you know what? I bet it's this line. It's either going to be when things accelerate to the upside, which still is more probable right now until this is taken out. But when you start seeing price really get moving, it's either going to be taking out the current local high, or it gets stuck here for a while, because this is an important line as well. It could only hit 177, pull back, do another higher low, or get stuck in this area and then go up. I would put my money on price doesn't really zoom up until 177 is taken out. So with that, getting excited about momentum or velocity to the upside, momentum to the upside, I would temper my emotions with this high being taken out because of this line here. All right. But as of now, it's still more probable that this high will be, that 177 will be broken. All right. And we've already discussed when those probabilities flip. So that means Trias can come down an entire freaking 20% and still be bullish. Like 20% pullback. I think that it's still more probable 177 will be taken out. As weird as that sounds, that is how I would put this. And so what does that mean? That just means this is very, very tradable right now. Very, very tradable. If you can go down 20% and still be bullish, that means you're dealing with a lot of volatility, right? And you have very clear-cut lines, which means you have predictability. So too bad you can't trade this on futures. I mean, this would be a fun one because you can't trade it to the downside on spot. But yeah, so Trias is a good one to be trading on spot because you have very clear-cut dry lines. You have areas of confluence or multiple different types of traders seeing the same spot, the same idea at the same time, but for different reasons. It's honestly a great chart to be trading on spot right now. And if you're trying to learn how to trade in this bear market, trading on spot is a lot safer anyway. And B, this is volatile enough just to trade on spot. So this is a really good one to be dealing with right now. And that's what we got. So a breakdown for Trias, I mean, yeah, it would probably head straight back down to 80 cents. Right there, if it breaks below there. Slowly, not in 1 hour, right? You have a lot of lower highs to go. But yeah, I would say, honestly, I think 250 can be hit. Especially after FOMC, if Bitcoin could stay flat or better. Like Bitcoin doesn't even have to go up for 250 to be hit. So yeah, I'm thinking 2.25 right now is probably my favorite target, but 250 could easily be hit. So Trias is looking, there's plenty of opportunity. Now, you always want to keep an eye out on Bitcoin price though when you're doing this, because if you're getting a pullback to your spot to enter for a buy position, but Bitcoin is breaking below its own threshold, which we've already identified in the Bitcoin videos here, but Trias has not crossed its threshold, rather is approaching it, yet Bitcoin already crossed it to the downside, then that means, you know what? I might want to wait to see what happens here, or don't go so aggressively. So do not forget to use Bitcoin pivot points, probability pivots, in conjunction with your ideas and actions on Trias. Okay, am I making sense? Again, a pullback to here is still bullish, unless it's pulling back and at that moment Bitcoin already flipped bearish. Then I would probably wait. I would wait. I wouldn't just nail it at the exact level. Okay, let's try this. Chris Crane, bottom target for what? Yeah, Lee Smart. I stress that on my channel all the time. Damn, my camera's going blurry on me. It does one of two shapes every time. Float up, spike down, back to the middle, or float down, spike up, back to the middle. It does one of those two almost every time the last 2 years. The last two might have been the same thing. They both might have been this. But if you go back farther, these are the two shapes that dominate FOMC volatility. More specifically, from the middle point, if you can correctly guess it, it does not deviate more than 5% up or 5% down. There's been one exception. That was with a 6-month closure when a bunch of options were expiring. So there was extra interest to piss with Bitcoin price exactly at the closure. Bitcoin went up in one direction, 10%, in like a 5-minute candle or something. Right, because you had hundreds of millions of dollars on the line, so price got messed with really big there. But without a quarterly closure or a 6-month closure, on top of what you're saying, it's two shapes that are most common, and you have specific parameters to work with. You literally know how big it can get. Sometimes it's only 7% range, 3.5 both ways. Or from the middle point, sometimes you'll get 4% one way. It floats up 4% from the middle, spikes down but it's only 2% from the middle and then back to the middle, right? Something to that effect. But you at least know how far it won't go past those points. But yeah, you're right. It does make the playbook is pretty similar. I think last time it might have been CPI data. CPI data added a head fake last time. So you had a similar shape. So CPI data release does the same thing. But which way? No, it was this way. Yeah. So price of Bitcoin and stocks were floating down. And right when it released, it spiked down more on a 1 minute candle to get all the longs out. And then it went up. So it was like a juke within a juke. It was really strange. And it doesn't usually do that. But you only need 1 minute to kick you out of a trade, right? It literally takes 1 second. And that's all they needed for that one. All right. Nate Daniel is asking, during your first bear market, did you feel like you were making or missing a lot of the opportunities by being stuck in the mindset of everything going to zero, making you stay sidelined? No. I had the opposite. I held on too long that it was all going to keep going up. I would have been better off had I had that opinion it was going to zero. Yeah. The inverse was my problem, which is usually, that's, I was class of 2017. Most of you are class of 2021. Almost all of you who are class of 2021 or late 2020, but we'll call you bull market 2020, class of 2021. Most of you held shit embarrassingly too long, 80% or more down on multiple things with way too much of your portfolio, just like everybody else. So no, that didn't affect me at all. I once Bitcoin had plummeted to 3,200. Let me think of how I did it. Yeah. Yep. I DCA'd into smaller cap alts, which did not pump with the first rally that stayed going sideways forever. And I just, am I stuck? Nope, I'm not. Okay, I thought the YouTube was stuck. I DCA'd for like a year and a half. Not into the right things, but even those not right things still like 5x, 8x, all that stuff, which is okay. But I didn't choose I made the mistake of choosing small caps near the beginning, which you're not really supposed to do. There are very, very, very few what were then small caps that turned into massive great bets. Phantom was one. Phantom went down 80%, then crashed another 99%. Literally. After falling 80%, and then became a massive big cap. But to have your strategy guessing which micro cap will do that, it's a horrible bet. Like, you're not going to pick a Phantom. And if you do, or if you're trying to pick a Phantom, a small cap that becomes a big cap and takes off, the chances of you being successful are extremely low. Therefore, it would be better to mostly get early macro reversal, big caps first, Ethereum particularly, maybe Cardano, probably Solana. Let them race up, sell into that first rally. Don't need to sell the top because it's going to come back down and make a higher low. Like a very aggressive down, but higher low. And that is when you could start getting it after the first rally and then a higher low macro, which could take a year, right? It could take I think the last one was 500 days. From coronavirus back to its December 2018, I think it was like 530 days. So yeah, plenty. So it's not like just one move. It's a whole, like a third of a market cycle. But it's a better, because yes. So because that first rally, the small caps aren't going to do jack shit. So you're going to be left in the dust by the big caps doing awesome gains, like 400, 200, 400%. Sell into that rally, wait for the higher low, and then start going into your, maybe not even small caps. Then I would transfer to mid caps, because they will get the second rally near the beginning as well. So what hurt me the worst last bear market were those two things: holding on too long, thinking everything was going to go back up, and not choosing the right size market cap coins for the beginning of the bull market. All right, but the next bull market could be totally different, but that has been the common denominator of the last two, so it's a fairly safe bet that is going to be an appropriate strategy, general strategy. That's a good question. I've never been asked that before. DCAF asks, if BTC bottomed at 17.5K. So again, remember, if I'm skipping over your questions, I'm doing so with a reason, because my YouTube community members have the emblem, and I only have time. Hell, I'm way past. Hell, it's freaking. Damn, I've been doing this for 2 hours already. Gosh, it's already 8 o'clock. If BTC bottomed at 17.5, where do you see the bear market lows for Harmony? Do your original targets, are they still possible or not? Okay, if Bitcoin bottomed, okay. And then near at 95 cents, still possible, okay. So under the parameters that Bitcoin has bottomed, which is, it's not likely, not probable, but it is possible, very possible. Strong double digits possible. Under those, why am I going to Bitcoin? 1. Those are my small caps. Come on, big caps, where are you? If Bitcoin is bottomed, can Harmony still hit this bottom target? No, I don't think so. No, it would take out these lows, but I don't think it would go down 65 more percent. Now, I think you would stop at an origin line, 1 or 2 origin lines higher. So with time, 2023, yeah, I would say you'd be looking at closer to a penny. If Bitcoin's bottomed, it could easily still tag a penny. Because even Cardano, last bear market, made a lower low when Bitcoin made a higher low during coronavirus. So large caps, besides Ethereum, and probably Matic and Atom, Ethereum. Yeah, those three. I wouldn't bet on a lower low with Bitcoin's higher low. I bet those three have a better chance of making a higher low with Bitcoin's macro higher low, which likely will happen a year or later after its bottom, whenever it decides to bottom. But since Harmony 1 is not in that group of strong performers, it's extremely much more likely to form a lower low than this when Bitcoin makes a higher low. And a higher low would be clearly above 17.5 because that's the parameters of the question, if Bitcoin's already bottomed. So I would increase it to closer to a penny. Near at 95 cents, same question, same parameters. Man, so that rally really faded. Oh my gosh, what was that all about? And this was all before the Ethereum merge shit. Hell, this started going down. So money came out of here and concentrated on, okay. Yeah, this was victim of pumping too early. Because people took their profits, went on other stuff that pumped with Ethereum's, upcoming merge stuff, and they never looked back. Yeah, the price of Near actually would not be this low had it not pumped earlier than the other alts. And the same type of idea applies to BPRO. Had BPRO not pumped so early in the market cycle, it probably wouldn't be as low as it is right now. But the same idea applied to a more miniature time frame. 95 cents if Bitcoin has already bottomed. No, if Bitcoin's already bottomed, it would stop at one of these 2 points if it kept going way down. I don't, so if Bitcoin's low for this cycle truly was, so even though I don't think it is, but if, in that case, I think it's extremely unlikely that near would go under this point here. This would be, because it would be all-time lows. And I think just like Trias, its all-time low area was defended, so would near's. Yeah, Bitcoin would have to have a lower low for that to be taken out. So my answer would be no to both. Yeah, I covered Trias. I recorded it, so it'll have its standalone video. Caught a short XCN. So this is more of a Discord type of question, DCF, but because I don't like answering these questions on YouTube live because it can or does create incentive for other people to want to like FOMO into a move. And on leverage, that can be pretty dangerous. Yeah, he shorted the weekly 10. So if you shorted that just about an hour ago or whatever, there's really no point in having your stop out of profit or break even. You need to stop at break even or better. Because, I mean, hear me out. Let's say if it does a failure pattern, so a rejection then failure pattern, then heads down, it's better mathematically to be stopped out at near break even price, re-enter up higher, because the tiny loss in fees that you take by getting stopped out at break even, if you were to enter up higher on a failure pattern above here, you would get all that back by the time price went from here down to that same point. You'd already have it back, plus all the move. So that's why it's better to just allow yourself to get stopped out if you're going to try to re-enter the same mentality trade, the same bias, same direction. Might as well, instead of saying, oh, it's okay, it'll come back down. I'm at a loss, but it'll come back down. It mathematically doesn't even make sense. Because you'll make that up by getting stopped out, re-entering somewhere up here, and by the time it hits the same point you were at anyway, you already got that money back. So, with the assumption that you're correct. In the assumption you're incorrect, then it's obviously better to be stopped out too. So, yeah, either way, if you're correct or incorrect, it's better to be stopped out if that were to be hit again. So in all cases, better to have a stop right around break even. So first and foremost there. Profit taking. This is my fly swatter. You have two general, or I would go over two general thought processes. First off, you want to use the projector tool to roughly make a 45-degree angle. Yeah, something like that from the bottom, with the idea that a midterm time frame pullback could come down to there, and it's just a higher low, and it keeps going up. But even if it comes all the way down there, it's likely to get a bounce, which would reduce the amount of profit you have in that trade. So I would say 45-degree angle, it's not just one level, but whenever it hit that, I would personally take profits. And if I wanted to stay short, I would wait for a bounce and then wait for it to bounce into resistance from that line. So like, let me zoom in. Maybe the weekly 10, but if it went like this and bounced up, I would take profits there, looking to re-enter at an obvious point, which honestly, this would be a perfect setup. Oh my goodness. Because you have this obvious horizontal mixed with the weekly 10 coming down on it. Oh my goodness. So by that time, the weekly 10 would probably be flattening out. Oh yeah, that'd be perfect. Yep, so on a short, I would take profits. So that's an aggressive way to do it. That's just one general idea, and that could take 3 weeks to take profits. So you might just be walking your stops down for 3 weeks. Another way you could approach it is you don't set a profit-taking point. You just keep walking stops down, because what's the trend? What has the trend been? After every rally up, what happens thereafter? You make new lows. Rally up, what's likely to happen? New lows. Rally up, what happened? New lows. So if you're feeling cute, you can try that with the idea that the trend will continue and it won't reverse on you. But even if it does reverse on you, you're going to be in a profitable trade because your stops will be walked down in profit. So a way that I like to walk my stops is I like to see price go my direction, whether I'm trading up or down. So in this case, it's down. I like to see the pullback, which in this case, a pullback is up, right? So I haven't moved my stops yet. And then after it takes out this low, that's when I move my stops down healthily into profit. Does that make sense? So I want to see, so I would guard my stops at a risk-free trade. I would wait for it to come down, find a lower high, start coming back down. And really at this point right here, you technically could move your stops healthily in profit. But the habit I've made for myself is I wait till price takes out the low from which it bounced to, the opposite direction. Once it passes there, then I move my stops down. The reason I do that is in winning trades that I could hold a little bit longer. If you don't wait, this is just kind of my foolproof way to not get stopped out unnecessarily. There are pros and cons to this method, right? But it is a pretty good, it does work pretty damn well. Yeah, so those are, and you could keep walking it down the rest of the bear market like that, if you were able to stay in the trade. And if it actually does continue the trend, make it rally, then make new lows, all those things would have to happen. But I think this is an okay situation to try to attempt something like that. Those are two general options. Okay. Harrison asks, under the conditions Bitcoin spikes up to 21K or higher, which as of right now is still probable, where will QSP and MTRG go? Okay, so last time I did this, I gave breakdown points and I made this triangle. So this is yet another triangle which has worked. Price going sideways, which technically it's because most of price is going sideways, so it's not that miraculous of a guess, right? It's not really that big of a deal. But a lot of my triangles have stuck pretty well. Okay. Honestly, this one has a chance to continue going sideways even after this because the weekly 10 is there. If Bitcoin spikes to 21K, this line right there, And at most, yeah, this would be the highest I see it going, which would probably be a big ass move. Yeah, I don't see it going higher than this origin line. This is an origin line, and these are channel lines. I really should take these off for now, but they're just making the chart all muddy. Oh, I don't have them in folders yet. Son of a bitch. Oh well. Yep, this origin line right here is where I think it would go at the most. It also could only get up. It might underperform. Well, actually, to 21K. Nope, that would still be outperforming Bitcoin. So really, just its current local high, that honestly is more probable. Yeah, if Bitcoin gets back up to 21K, I could see this actually making a lower high, which that would be a double. But if Bitcoin hits 21K and this finds itself here, and Bitcoin continues going up to 23K, then after that snapshot in time, then this origin line comes into play. But if Bitcoin goes to 21K and stops, well, I think this is your most likely target. Okay, and then the second one was there's a quant and a quant stamp. What the fuck is this? It's on Coinbase. The best this will do is a wick above its weekly 10. Yeah, this has a lot of work to do before it can get above and stay above. So therefore, a move to 21K on Bitcoin, it's just going to keep doing the same shit. And then as Bitcoin continued going up, this would go up and then have to retest it and then build a base. But by the time all that happened, Bitcoin might be done already at 23K, then it breaks down. So because this is not ready to pounce, it actually looks a little bit more ready to break down besides some of these. So you're having a pennant form, higher lows and lower highs, which is common, especially if you have the big bad indicator barreling down on you with a horizontal, that you just form a triangle. That's how it works. But a break above this triangle, it still has to put in more work because of the way it's interacted with this weekly 10 EMA. So if Bitcoin went all the way up to 23K, this could spike up. It would have to come retest. And by the time it retested, Bitcoin ever hit 23K and reverses, then it could break down. So even if Bitcoin went to 23K, I don't think this would go much higher than this previous two wicks back. I don't think it'd go higher than that. And if Bitcoin only went to 21K, I bet it wouldn't go much higher than this. Those are my thoughts on that one. Yeah, there's too much pressure down. There's not enough reasoning for people to flip bullish or for current people to be more bullish. ICP is still tanking. Yeah, right after I gave up on shorting it because on the platform I was using, actually across all platforms, it's not really traded by people. So the only way to really trade that, definitely not medium or high leverage. You'll just get whiplash. It's outside of momentum, you can still trade momentum. But horizontals and levels ICP, there aren't people trading it, man. So if you're trading ICP, low leverage, like more of a swing trade with entries that that could take 7 whole days to get fully entered before the move takes off. If you're trading ICP, that's probably the way to do it. If BTC goes to 25K at the end of the year rally, can ICP hit $10? So this would be going up 100%, while Bitcoin only goes up like 25%. Well, I think the answer to your question is on its Bitcoin pairing. In order for that to even be possible, So for that to happen, if Bitcoin went to 25K from a percentage basis, that's only a 22% move. If ICP were to hit $10, that's a 90% move. So what does that mean by default? ICP has to begin strongly outperforming Bitcoin to do 4 times greater, right? It can happen, but you have a chart to show you when that becomes more likely. And until that thing happens, it's not even a discussion. So ICP needs to form an uptrend on. So this is versus Bitcoin. See this right here, where it says ICP versus Bitcoin. This is not versus the dollar. You need a trend reversal on this. Right now, it's continuing the downtrend. So right now, in current conditions, it's not possible. In current conditions. Is it possible for those conditions to change, therefore providing a possibility for it to happen? Yes. Make sense? Right now, it's not even possible. This chart has to begin an uptrend. Or it can come in form of blasting through the weekly 10, using it as support, and then that's probably how it would happen. But until you get above the weekly 10 and use it as support, not even possible. So no, right now, with current conditions, it's not going to happen. Is there anything suggesting that the conditions will change? No. You'll just see it. You'll see the trend reversal on the chart. It's that simple. Just use the Bitcoin pairing. Yeah, I already checked out Trias. Pulse chain will billion X. Dash bottom. Post us. Thanks, Ottoman. You realize, though, Autumn, that all those times you've sent me a super chat, that you're the community, I'm going to have to essentially owe it back to you. With coupons / just like making you a team leader or something. But thank you. I don't know. I really want to buy Dash on this line. I want it to break this horizontal and hit that. That's where I'll enter. It's not a specific price. You know, it could be close to $30. But if it takes a long time to get there, it could be closer to 26 in December. I just want the top of the point of control of its current macro range. So right now you have origin lines going up, and you have the macro channel from its top, right? So kind of like Cardano, this is in a year-long channel. It's flirting with the top of the channel. Hasn't broken out of it like most coins have. Even Bitcoin broke out of its macro channel. So did Cardano, barely. Chainlink has broken out and gone straight sideways. Hell, even Trias has gotten out of its too. But Cardano fell back into its, and so did Dash. Yeah, so the top of the point of control. So if you want to have this for yourself, I'm on the daily chart. That is its market cycle high of May 2021. You're just trying to make it look similar to that. And the top of the orange line, as of now, would be about $30. And yeah, I haven't done a spot trade on Dash in like 6 weeks. But if you look at it, guess why? It's going sideways. There's been nothing to do on spot trade for Dash. Because I'm not looking for like 5% moves on spot. I need more reward. So I need it to come down before I buy back. Yep, that's my exact thoughts. If I buy back roughly, so I think the last time I sold into a rally at about 42, 43 bucks. The neat thing about that is, if it starts taking off, I will see it happening above this macro line, use as support, and I'll be able to buy back in right where I sold. So I have the same amount of Dash in the event. It just is going up. So that's the cool thing about Dash right now. Specific to where I last sold. Because last time I bought this trend line. And it's also an origin line, I think. And then I sold into a small rally. Yeah, so either way, I'm going to have either the same amount of Dash or more Dash. And with Dash, I am accumulating with other people's money. I'm not DCAing into it. I started off with 100 Dash, roughly. I don't know if it was February or April of 2022. It's one of those 2 months. And I've 2.75x'd it. With only probably 10 trades. And only one trade did I lose Dash. Yes. Yeah, spot trading is a lot less, it's a lot less stressful, but you also get fewer opportunities with spot trading. Because you can't short it. You have to wait. All right. But really, all you do, like, if you want to accumulate other people's money in a bear market, this is literally all you do. Watch. Is you buy you buy after a new low has been made and you think Bitcoin has enough bullish divergence on something like the 1 hour chart. Don't try to catch the bottom. So you buy a new low under, just normal parameters, nothing specific. When you sell, you don't care about where you sell at a top. All you do, and really it could all boil down to this, not even the buy. All you do in a bear market to accumulate is sell into a rally at a point where you feel the probability of being able to buy lower than that point at any time in the future is extremely good. Therefore, you don't worry about how high a move is going to go. So to accumulate coins with other people's money, you buy near a low, and next rally, you sell into it at a point where you feel in the next 6 weeks, price will be below this point on a normal pullback. Even if it's a higher low and it continues going up, it'll still go below the point I sold. That's it. The only tricky part about the entry is if you enter heavily at a low and then it goes way down, that next rally might only go up to where you bought it, right? So therefore, the entries are of importance, but conceptually, it's just one mentality to accumulate crypto with other people's money in bear market. Sell into rallies at a point where you think price will eventually be below it. And when you buy, just buy a lower low. But don't buy as it's still momentum. Don't try to guess an exact bottom. Wait for price to bounce on, for 5 days. And come back and retest it to make sure it's not just going to keep. Don't try to catch a knife. Yeah, don't try to catch a knife on spot and sell into rallies at a point where you feel price will go under at some point in the future. That's all you do. And doing that without trying to get tops or bottoms and all that stuff, all the fancy stuff that you do with futures to try to be super precise. I've 2.5x'd it in less than a year. With I think it might be only 8 to 10 trades. Yeah, getting out even of trades you get in trouble with, that's great. I've been there. Everybody who has 500 trades or more under their belt has been in that position more than once. And it feels good to get out and profit. Holy shit, I weathered that. I am out. Absolutely. But most people, once they get back to break even, they don't know to get out. They didn't learn their lesson. They still are hoping, okay, now it's going to go my direction. No! If you got yourself in hot water on a trade because you didn't set stops at the right level and you happen to be back at break even, get out and wait for a better entry. Goodness. Yeah. Oh, like, yeah. Whenever you're in that position, just, yeah, get out at break even after that. Oh, man. Okay. Yeah, I wore this when I started YouTubing, so it's back to sock hat season. It's really not cold enough right yet, but where I am. Thank you. Okay. Let me wrap up with this idea here. I didn't cover Cardano. So since you stuck around for so long, I'm going to give you a piece of info that I really thought I was only going to give exclusively to my community. But right now, I think a combination of two charts might be the best true north indicator that will help guard you against fake outs, mostly due to FOMC. It's a combination of, and you're going to be, so non-community members, or even the loyalty tier, you're being rewarded for staying here this long. Dixie and Apple. Not like Apple as in fruit, but the company, right? Which technically is named after the fruit, but whatever. Even the logo is a fruit, but you get what I'm saying. Those two charts. Let me show you what I mean. When I covered Dixie last week in a live show, it looked bearish. Everybody's thinking downside, right? I still think at this time, because, and I mentioned, if price on small time frames, so I did it about here, if it can get back above the weekly 10 and bounce on it, then it's probably going to come past here. And the likelihood of 115 to 120 being hit, which means Bitcoin and stocks will go down as that happens with an extremely high likelihood. The chance for that to happen is extremely high, right? That's thought number one. I haven't completed the thought, but just keep that in mind. My conditions for 115 to 120 and the uptrend to continue despite weekly bearish divergence, it has been met. As of right now, it is more probable that 115 will be hit before it reverses. As of right now. Could the right now change? Yeah, because you're not far away from the weekly 10, so this is like a probability flux zone. From day to day, the probabilities of yes 115 or it's done, they can be in flux and they can go back and forth, right? But as of right now, where it is more probable that 115 will be hit before this is done, right? That's idea number one. And the conditions for it to change are crystal clear. You have a crystal clear horizontal, and you have a weekly 10, and they're converging, right? So that's main idea number one. Apple, number two. I have the years in here just for relativity. But looking at this chart, stare at it for a minute. All right, now stare at it, focusing on when price goes below one of these lines, what does it do? Any of the lines. There are some exceptions, like here, 2006, you had a V shape and it stopped in the middle. But besides that, the same thing applies. Whenever you go below one and use it as resistance, you hit the next one down, right? I'm going to zoom into current price. These are origin lines on, so it's the same rules that applies to Bitcoin. We've gone below it. We're able to get above it on first pass. Went below it just a little bit, which could just be called it like a, like a reverse failure pattern or something, which technically is okay because it was able to maintain higher lows to push its way out, right? So to push your way back above a resistance, you don't need higher highs. You simply need to maintain higher lows as you approach it, which means you're compressing under it, which means you're consolidating under resistance, which becomes bullish, right? It forms a triangle. That's why you don't need higher highs. You only focus on the lows when you go below resistance and come back to toy with it. All you care about are the lows. In terms of probabilities of if it will go back above the resistance, or what is now resistance, which was support. Okay, same thing applies. It has a second time breaking below, which automatically increases the chance that this will be a rejection, right? But it is maintaining higher lows, which is contrary to that first thought. And it's in such a definitive macro area where the micro timeframes have a super specific line, and the consequences of that super specific line will have macro effects. This is like perfect. Oh, it mixed with Apple is like the king daddy. I mean, it's the beast of risk on assets. Like Apple, I mean, just zoom out. It's doing better than Tesla, than Amazon, and everything. Like Apple is a freaking beast right now. I mean, look, it looks like it's consolidating at its freaking highs. It's a beast. So when will that change? That when could be now, but you're going to know it because it's so finite, right? All right. So mixing Apple with, so not individually, mixing it with Dixie. If Dixie can stay above that horizontal in the weekly 10, and in general, Apple can't stay above this line. But during this week, most other assets, Bitcoin, whatever, are involved with some fake out in one direction. You're going to be able to see that it's a fake out with the conjunction of Dixie and Apple together. For example, if FOMC whiplashes price bidirectionally, lands back in the middle, which will probably happen, and then Thursday, Friday, and Monday, Bitcoin and stocks go up, you would have the probability on the Bitcoin chart only that it's going to continue going up past 21K, right? Because the way the chart is saying, that is most probable. To know if that's a fake out, you will be able to see it, or to be able to better predict that this is not the real direction over, the what do you call it? The twilight, or the, what do you call it? This, yeah, just post FOMC glory, right? Volatility. In the aftermath, that's the word. In the aftermath of OMC, which lasts Thursday, Friday, all of Monday. Okay? So true direction really sometimes doesn't pop out until after Monday closes, because they use Monday as continuation of that fake out to the wrong side. It's just how it works. Okay? If it's a fake out and Bitcoin's going up, which on the Bitcoin chart means you actually have a locked in good probability that it's going to continue going up. But if that's actually a fake out, Apple will only do a failure pattern above this line or get rejected and won't stay above. And Dixie will stay above the weekly 10. So if you see Dixie above the weekly 10 and you see Apple generally not staying above this origin line, but Bitcoin's racing to 21K, other stocks are going up, that's a fake out. That's your fake out signal using those two things. Is that helpful? I've never used Apple and Dixie together like that, but they're both at such a perfect point with definitive levels that the micro chart will set the pace for monthly candles to come. It's just perfect. It's honestly just perfect. will a fake out even happen? Maybe not. I had a team leader today or yesterday mention his bets are that there won't be a fake out. That after the bidirectional or even no bidirectional volatility. So he's making two ideas. Either the volatility will be monodirectionally, which I don't think is likely, but that was his thought, or it'll do the bidirectional volatility and then on Thursday continue in one direction / up, especially if it's only 50 basis points on by Jerome Powell. And if it's 100 basis points, he think it'll be monodirectionally down, right? And in that event of just post price action, post FOMC price action, if you want to kind of double check the idea of is this all a fake out, especially if it's a 75-point rate hike, which that's where the fake outs will happen. Or at least a fake out that lasts 3 days long. 100 points, I think you'd only get a fake out for one day, Wednesday, Thursday, to the upside before it went down. But to tell if it is a fake out, regardless of what happens, here you go. And Apple plus Dixie, I will see you.